Well, good morning, everyone. How are you? This is Andrew Horowitz, and it is Friday. And TriggerCharts pre-market rundown starts now at 9 o'clock in the morning, as you do know. I want to make sure everybody is having a great morning. It is a GDP morning. We have a lot of news that is flowing out from earnings because we are in the biggest earnings week of the year. So lots happening there. Just do me a quick favor. I always like to make sure everybody can hear me just fine and that you can see my screen, the share screen. You got a little video box on the top there. But just tick back to me and make sure that everybody is hearing me just fine. And then we'll start and get going. You can always ask questions over in the chat panel. I'll type a little here so it pops up on your screen. And you can simply just put in your stocks. We'll talk about some of them as well. Everybody can hear me? Got a nice group today. That's great. Yes? All right, looks good. All right, ready to go? Here we go. All right, a couple of things I want to mention. There are some disclosures we have to do, some disclaimers, making sure that you understand this is for educational purposes only, and that this is not a recommendation to buy or sell any security at all. And it's important to understand that, again, we are just going through some ways of looking at markets from a technical analysis standpoint. I'm going to use some of the tools that are available from TriggerCharts, and we're going to look at some of the various levels of support, resistance, some key areas of momentum, and we'll go through a lot of that. So there's the disclaimers that are right there on the screen that you're looking at right there. Let's close those down because we did see those. Everybody did see those. And let's take a look what's going on. So yeah, we have a major week for earnings. The S&P 500, about 100 different companies reported. A little bit of mix, but generally speaking, a little bit better than expected. In fact, a lot of people were worried about what was going to happen this quarter due to the fact that we have a slowdown in the rest of the world, right? You know, we're seeing that in Europe. Mario Draghi came out yesterday and was just absolutely miserable. You're talking about it's worse and it's getting worse even further, and talking about how they're going to have to apply some kind of stimulus. We're talking about stimulus from areas from Asia to Europe to everywhere, in fact, back to the U.S. due to the fact that there's a slowdown. I mean, things are slowing down. So some of you are probably scratching your head and wondering, well, if we're slowing down, why are stocks at an all-time high? Oftentimes you do see in the initial stages of a slowdown that we have Fed stimulus programs that are being initiated, and that is very favorable for stock conditions. Right in the middle of earnings season as well, plus the fact that we have a lot of trial balloons going up, commentary by the government, talking about trade talks that are going to restart on Monday in China. All this goes into the idea that, hey, you know what? Let's buy stocks because valuations are a lot better when interest rates come down. And if earnings, in fact, are holding up really nicely, then what do we have? Well, we have kind of a perfect storm for the opportunity for stocks to move higher. And this is why you've seen on certain occasions, stocks actually come in and miss their earnings, but go up. So something to consider. All right, well, we had the Fed, actually that says red, but that should say Fed. The Fed is in their quiet period. I think it's on the 31st that they're going to have their actual rate decision. And when they have their rate decision, it looks like there's going to be I think it's close to a 100% chance of a rate cut at the next meeting. About 70% right now are looking at a cut of 25 basis points. About 30% chance cut and probability of a 50 basis point cut. Now with GDP coming out this morning at 2.1%, a little bit better than expected. Expectations were for about 1.8%. What happens there? Well, you have a lot of people who were looking at maybe seeing a really weak economy and hoping for the fact that we're going to see a very aggressive Fed moving towards a 50 basis point cut at that meeting. Seems kind of improbable to me. 25 basis points even seems a little bit ludicrous. You know, you have GDP that's holding above the 2% line. You have the area of stocks hitting all-time highs. You have unemployment doing really well. And then what do you have? You have generally the rest of the world not doing well. And now we're going to cut rates here. And we almost have to. So let's kind of just remember that the Fed is in play right now when it comes to stocks. The ECB did signal more stimulus because PMIs, purchasing managers, indices around the world are fading. getting into that contraction zone, seeing the potential for a recession, a manufacturing recession. You're going to be hearing a lot about this. To talk about, we have this bifurcated economy where we're seeing the potential for a manufacturing recession that's going to be hitting. Yet at the same time, we're not seeing it in earnings. So no earnings recession per se. Remember one thing also, expectations are the bread and butter for stock prices. Where we thought that there was going to be possibly, let's say, a 50-cent per share overall earnings for a company, and analysts brought that down to 40 cents over the next 3 or 4 months. The company comes in at 42 cents. They beat, but 3 months ago, the expectation was 50 cents. You follow what I'm saying? In other words, these earnings are being managed in a way in order to have a nice beat overall. And when we have that kind of situation, for the most part, investors are really just looking at, okay, are we beating earnings? Are we beating revenues? You know, what's happening there? And that does move stocks dramatically. What's the theme this week? Waiting out the Fed. Waiting out the Fed. That's the theme this week, and next week probably also. Now, a couple things I'll mention before we get into the stocks and take a look at what's going on with markets right now. Let's get a quick look at where we are. We're seeing that the Dow Jones futures up 80 points, ES up 8.5, and the Qs, the NASDAQ 100 futures up about 25 right now. I'll mention this again right in the beginning. I don't know what's happening here. Let's go here. There we go. If you want to get that 4-hour training course, all you have to do is an online coaching session, 4 hours, do it at your leisure. Anybody that signs up for the Commander Series indicators over on the trading app store over at TradeStation, we will get that to you. Just email us, send it over to info@triggercharts.com or any of the email addresses over at TriggerCharts, and tell us that you did subscribe to it and you are a paying client and customer of the indicator, and we will get you a 4-hour training course. So make sure to do that. What else do we have to do? All right, let's talk about the earnings we're going to talk about. Google, Facebook, Intel, Amazon, Align Technologies, Twitter came out this morning, beat by, I think, 2 cents. We're going to see Columbia Sports, RCL, Expedia, a few others, Ford, Tesla, and other stocks of interest. One of them was brought to our attention last week by a viewer was STJ. We're going to talk about yoga and BYND. Have you seen that stock, BYND? Oh, my God. It's beyond unbelievable. This is that, we'll call it fake meat. It is that alternative to beef. It is the very good tasting veggie burger that now Dunkin' Brands is taking in the form of sausages and bacon. Kind of weird. But I guess if you want a bacon and eggs and you don't eat meat, I don't know why you eat the eggs then. But anyway, if you happen to eat eggs but you're a vegetarian somehow and you want the vegetable and vegetarian source of bacon or sausage on there, who knows? I think the thinking is that McDonald's are going to pick this up as well and a few others and really move the stock very nicely. Let's take a look at what we talked about last week for a second here, because we did talk about silver, if you remember, right about here. That's where we were talking last week, that silver was looking like it'll break out. We drew a line above the prior resistance, very clearly denoted by a red line that we draw right on the chart for you using the altimeter. This is part of the Commander Series. Very easy to look at, very easy to understand that we have this very wide range right here, a breakout above the former level that we tagged. Was going to see a ramp higher because there was nothing moving left, always looking from right, looking left. And then we got this breakout. I said, you know, if we get above this level, and we kind of had a little bit more of the chart on the screen at that point, we could see a breakout. Currently trading a little bit higher today, but did see that break and that move from 1526 to 1529, 2% on silver, not a bad move. Gold also is moving, then kind of retraced back a little bit. And now we're kind of at the 15, where we trade at 1544 range, right about here. So kind of an interesting situation there. Let's talk a little bit about where we are here. This is a couple of charts that I like to look at and reference from looking at, you know, what's going on with the markets. What is the aspect of the overall trends? And right here on the left-hand side, if we're looking here, what we have here is the McClellan oscillator, and you can see that it goes up above the 0 line, it goes down. Oftentimes when you get to plus 250, it looks like either one of two things. A continuation plan, you know, the up-down ratio is really continuing to show decliners less than advancers, so that advanced decline line is very positive. And we're seeing that the McClellan is reaching up and it does well, and that could be an initiation of a new move, and we did see that, obviously, from the December lows. When you get below and you see a complex move below the 0 line, this is that gray line right here, what you notice is that you start to see a little bit of a consensus move to the downside. You have to look when it does break down below about 200, 250. When we see these kind of levels where it just can't get above the 0 line, it is below the 70 line, this is a downtrend, and we did see that confirm out on the top. Then you start to move up. What I use this for is just to get a confirmation of the breadth of the markets and directionality of the markets. And then below that, I put the 52-week new highs, and we're seeing that we're seeing about 165 new highs on a 52-week basis from where we only saw about 20 back here. So you knew there was some bad things going on here, very oversold conditions, very overbought conditions up here. And now we're starting to see that kind of mid-range. Probably about 100 is your average long-term. On the right-hand side, and focus on the bottom of this, what we're looking at is the Spearman indicator. Below 0 is really not a good situation, meaning momentum's coming off the markets. When you hit these levels, these negative 90s down here, you see that? That's an indication that you really need to pay attention to. So this was June right there. So mark this right here, right? This was June. Let's look over here. June, we saw a little bit of a dip down also, and it confirmed out with the Spearman, with the McClellan. And when you go, lo and behold, you go up to the chart and you look, this was a buying opportunity. When I see a confirmation both on the Spearman and the McClellan, and I see things really hurting on the advanced decline line in terms of 52-week highs and lows, and I see a big dip in the markets, that's kind of like where you want to look at buying some things and looking at, loading up on the opportunity for a bounce. And then we got, of course, the KRI, the key reversal indicator that we put out over on the TradeStation Trading App Store. And by the way, all of this, you can go over and you can go to TriggerCharts.com. I'm going to type that in there for you. And there is a bunch of videos and a bunch of really good things that you can find there, plus links to all of the products in the Trading App Store. But right now, interestingly enough, markets are in equilibrium. We're not seeing anything really significant here at all in terms of movement above or below the line. We're not seeing anything that really is concerning per se. When you see this line on the upside, it is nice to see an opportunity for an upward momentum move. Obviously, when we get these little dots, these little dots here, little dots, all these dots, those are good. So when you get all these here, you're going to see probably a roll. You get these peak outs, you get this roll. You get this green dot here, you're going to see the opportunity to move up. All this does in concert with the Spearman and the McClellan and a few other momentum indicators and overbought, oversold indicators is telling us, is this a good time to finally get in, or should I take some money off the table when it comes to markets? So the red lines are, hey, you know what, maybe we should tack back a little bit until we see that dip is over. The green, especially when you get that magenta. See this magenta here? This is something. This magenta line that you're seeing right here, and when you, right there, see that right there? Well, right there. That magenta line is a back up the truck. That's what it says. Back up the truck. Things are so overdone, oversold. That's a real problem. So take a look at that, and that's the KRI. Only works with one symbol. All it does is look at the overall trend for markets. Simple and plain. All right, getting into, oh, I don't do that. Let's clear this, get back to this. All these little buttons you got to push to get this thing working. All right, so let's go down and take a look at a few things here. All right, some stocks that we're looking at. STJ, this was a stock that we signaled last week. So it was about 5 to 8 days ago. Somebody asked us about this. San Juan Basin Realty Trust. Obviously, it's Puerto Rico. And this is the real estate in Puerto Rico. If you've been following any stories in Puerto Rico, there's problems down there. Well, it can be shown by the stock as well. This is down, we can probably take this back a little bit further to see what's going on. Look at that. It was $10. Now it's closing in at about $3. We signaled this because somebody asked me, it was a good point. And I said, you know what, there is some good support here, but you know what, there's nothing else to the left. There's a big downtrend. Everybody agreed, and I think all of us agreed on the chat in the session as well, all the attendees, that, you know what, this is not a great place to be. This does not look like something that I would really like to get involved with at this point. So we saw this and we signaled this and we said, you know what, this is not going to be something that's going to be really opportunistic. We'll go down to Google in a second. Actually, let's go down to yoga. This one's interesting. This is all over the place. Anybody that wants to play a penny stock, Some of you that like this, I don't really like this, but you can see that this has been wildly moving. You know, you got this baseline out here, you got the breakdown. It was down, I don't know, 50% the other day, went down to about 9 cents. Then it went up to about 80 cents. That's a nice move. That's a nice move. This is not something I'd play, but I just thought I'd show it to you because it's been moving around so wildly and has these opportunities to spike up very significantly. Beyond Meats. Anybody playing Beyond Meats? Anybody hold this? Anybody trading this? Anybody long this position? Opened up at about, I don't know, 25 or 30 some time ago. Back 3 months ago, it's now trading at about 237. We don't have enough, if you see this, we don't have enough data yet to really push in anything significant here. If you look at this and we did something like, move this to a 30-minute interval, you'll see that there is enough data to give us all of this, and it fills in and shows you where to buy. The 30-minute was the one you could have been using a lot of times to take a look at, the buy signal, which was the yellow, off of these very tight ranges, and then it moved higher. These are really good. When you see these tight ranges on the altimeter, very, very tight movement, and the top resistance and the bottom support and the high volume node, very, very tight. What that tells us is a good opportunity for a jump off point from there. It just can't get below that. Then you start seeing them get wide, bounced right in perfectly. Look at this. Just let's kind of get in here. It bounced perfectly on the inside of its consolidation, broke up again, stayed within its consolidation, then broke out again. Interesting to look at this. Again, this is on a 30-minute. You can do this on any time period that you want. Some people like a little bit longer, shorter. I like 30 to 60-minute personally. I like to look at daily for teaching and for understanding what's going on there. Earnings, we got Google that came out. Google now is trading up about 9% at 1233. This is the GOOG chart. Again, let's kind of pull this back a little bit and see where we are. There were some really nice signals here for both short and longs. Very simple. Green is long, red is short, or get out. Either way you want to look at it. Yellow is an alert that, hey, it's kind of a smack in the face. You got to do something here. We saw that the momentum really changed very dramatically here on the aileron, and that was a signal. And we started to see this rollover from about 1,200 down to about 1,000. So, about a 9% move to the downside into June. Picked up again, started playing back and forth, but there's some really good signals in here. This one wasn't so good, this short signal on the right. Now we got this consolidation again now. And now where are we trading? We're trading right at the, let's see, the 1234. So right about here. Trading right here. Now, when you look at this, you're pretty much, yeah, there you go, right there. What are we seeing? Right to the top of that last little peak back on the 18th of February. Above that, there's nothing. When we look at this and we kind of really focus in on what is happening here and where we are looking in terms of the look left, you got to say that above this range, there's really nothing going left. And that means that you have the opportunity to have very low volume, a fast move, a very considerable vertical move very quickly through time. And that's what's happening right now. So your target on Google basically is this line that you have right here. I'll add one more line on here. I think it was important. And we'll look at that. When we look at right about, I'm going to use my line tool right about there. 1209 is your stop, at least support level. If it comes back into that, there is some support at that level. That would be good. Below that, you start getting into some trouble. So Google looks interesting. And we got Facebook. Let's clear our drawings. Facebook. This was interesting right here. I targeted this yesterday, this area to the right of the chart, and we'll zoom in on this a little bit. Because what we're seeing here is that, look at this really excellent level of overall support that we're seeing there. At 198, 199, it came right into the support again. And then what happened? It bounced off it a bit. Currently trading up about $1 today after some questionable earnings. The DOJ input, the Australians are now in the mix of researching this. A lot of news last week about phone numbers that are being given out and user data being misappropriated. So what we have here is a situation where you can play this to technically, it's in a consolidation zone, so you really don't want to get here. I think that what you really want to look for is a breakdown, if it does break down below 198, and then take some opportunity. There's a little bit of congestion right here, and then also right on this line at about 191, but there's really not that much going on. There's some wide areas here. I would say that the target here is probably about the 180 level overall, possibly even, about 180 would be the target on the short side if it does in fact break down. So keep a watch on that. Intel, somebody asked about Intel. Who is that? Nick. Nick asked about Intel. And I put this little bit of a chart here together yesterday because I wanted to look at where we are after this earnings news that came out. Stock was up about 5% after earnings, coming in a little bit, only up 3% pre-market right now. Right now we're trading at about the 53 level. We were up about 55. So let's see, it did get to its level of important resistance, which is looking back and just finding one of these levels that you can see where there is significant points that you can bring together. So let's kind of bring that out. Below that, now, where are we now? We're at 53 and change, right? We're 53.60. Let's take this down to 53. Look at that. This is exactly the area that I targeted last night when looking at this. That's why I drew this box, that you had support down to this level. Now the question is going to be what happens from here. If you do, in fact, break this support, you're going to break down and kind of clean up back down to the level that I suggested right here, because what do we have there? Let's take another line. Very simple. Just use a box and line tool all day long. You can use an arrow here and there if you want to, but you know, you can kind of like take an arrow and say, well, you know, this is an area that I'm looking at. And by the way, you could change these arrows the way they look all the time so you can see them better. The default ones in TradeStation are not very clear. Just double click it. And then you can change the arrow. So you can change the style of the arrow. I think I'm on the line. There we go. There we go. There's my arrow. You can change the arrow style and then set it as default on the bottom for your up arrow, down arrow. Then you have the down arrow, which is right there. You can kind of put those on here and take those and they'll stick. They'll stay where you want them to stay. And you can put notes and text, by the way. I'm not sure if you know that, but you can also put text. You can kind of click and you say, you know, here is support. I don't know if I'm spelling it right. Now the problem is it looks really small. You could also double click this or right click this and you can edit text and you can say the style here. And you can put the color, for example. You can put a brighter color so you can see it. You can take your font, and let's say you want to put it bold, and you want to make it 12. Then set it as default. So there's your, you know, anytime you type now, it'll be that kind of look. And then you can take that, and you can put a little arrow on that, and, you know, kind of like, oh, right there's the support, or whatever you're going to do. All right, and you can just kind of click them, delete them, click them, delete them. A little trick there on that. But Intel, it's coming back into this 53.50. We're seeing it tick down a little bit here now below that line. So I think that, you know, your next level of support and a mid-level support is about 50, right in between here, about 53. Below that, it's all over. Right back down to this line right here. So this is the box that I would draw on my charts. And if you did get long here and you are thinking about continuing holding long, realize that maybe put some stop losses in below those lines because it is obviously fading on the really good news of not only earnings, but that we're going to see some kind of buy by Apple of their telephone chip. Then we got Amazon. Amazon trading down about 1.46% today. There's some really good support here. I mean, you could just simply draw you could take either the TradeStation and draw it. I'll just do a TradeStation so everybody can see what I'm doing here. Take a little tool here. I can say, well, there's some really decent, move it around a little decent support right about there, down to about the 1932 level, currently trading at 1944. But really what I want to see here is my bigger position where I'm going. And that's the range that I would see right now on this, below this level here. That's the range that I would see it breaking down to. You have some decent support moving over to the left on here. And you can see that very clearly, you know, with looking at this, and you can see that there is this whole area of congestion that goes all the way across. So when I look at that, I say, well, you know what, there is a lot, unless there's going to be some significant move by the stock due to the fact of earnings or something else, maybe these Department of Justice actions that are going on, you know, realize that you could trade this against those levels. A line dropped out. I thought this was interesting because it dropped right back down to a line that you would have put in here. And look at that, right, almost right, can't even see it, but it's right to the line. This line that you look left, always look left, look left, look left. Repeat after me, look left. You look left, and what you do is you take your eyes and you look to the right, you look to the left, and you look at your chart very quickly. And what you find is always looking at where are we. So you're going to say, you know, you question yourself, okay, what do we got? What do we got? What do we got moving on here? I got this whole range of nothingness, nothingness, nothingness. I got an area of support. Is that a good support level? Mediocre. Here's a tight area that if it drops, that could be my support level. So you got to look left and find out where those levels. Now, in fairness, you could have also said, well, you know what? I think I'm just going to take this line. Let's just take this line and move it. If we take this line, you could say if it was moving down, that, you know, somewhere around here, there's a decent level of support. It looks good. There's some tight lines here, but again, you may saw that, but it just dropped so fast, it's very difficult to deal with. Twitter up 5.5% today, trading at 40 and change, right above here, trading at 40.27. Look at that, right up into its line of resistance that we saw back in May. So there is some upside opportunity here, and then what you're going to do is you're going to have this range that you're going to really be focusing in on. You know, this range of, that's your Twitter range right there, down to about 36 to about 40, 41 we'll call it. If it doesn't break out above and needs some additional catalyst, beat by 2 cents this morning, you know, that's something. Let's see if there's anything else important on here. Tesla finally broke down. It's in a gigantic downtrend. It did see a reversal right here, and you saw the aileron call that as well. A little bit of a banger where you see the move from a real big low point and a trend lower, a support level that was held, and then moving to the positive. But we're rolling back over right now. There is support for Tesla. I think it's right at about 200, 210. There's some decent support. There's another level at about 197. Those are the areas you really want to focus in on for Tesla. And this stock, I thought this was interesting. It kind of came right back into its prior support level. Again, very easy to see with the color coding and the information that we put up here. So just keep a watch on that. By the way, there's a 10-day free trial. If you haven't tried these, go over and get your 10-day free trial. Check out all the things that are available here. It takes a little while. Read the material, watch the videos, plenty of videos, either on our YouTube channel, look up the TriggerCharts YouTube channel, or simply go to the TriggerCharts.com website. Plenty of videos to teach you all this. And again, that 4-hour video coaching course is yours if you do subscribe. A little bit of a teaser and giving you that, just to mention that. The top line here also gives us, I'm focusing on charts today, not the radar screen, which gives you multi-time frame. And we have a new version coming out soon also that's going to adjust and give you some further alert functionality in the next version. But this stock was up at about 18, dropped down to 12, kind of did this bounce and loop-de-loo. You got this support level that looks pretty solid, about 11.98, right about 12. Below that, your all bets are off, back down to 11. So if you want to trade this from the long side, it's kind of interesting. Right now, we're showing that there is a short in play right now. It gave an indication about 14.79 or so of the short, currently trading at about where's that trading? Right about 13.06 right now. Time for a couple of other ones. We have Microsoft. What can we say about Microsoft? It's a beautiful chart. It's a beautiful chart. There's nothing to say about this. There's nothing to do about this. The bottom line is it's a long hold. Yes, there have been intermittent times of breakups and a few little short positions. Every time Microsoft hits into its support, the bottom line, it just kicks right back up. And then we have Disney. Disney also is going to look about the same. I mean, well, what are we going to say about Disney? Let's take this out a little bit, though. Let's go weekly. Let's go weekly on Disney. I mean, weekly on Disney, there was this incredibly long area of consolidation, right? So we take a tool here. We just simply will look at this consolidation range for Disney. You finally broke out of that level. It was a really great indication here. You got this real massive thrust up on the aileron. Aileron is a separate subscription, by the way. What you get with the Commander series is a combination of radar, which is this, which is a very refined and granular look at the market profiles that make up the altimeter. You get the radar screen and you get the autopilot. 4 things, actually. You get the autopilot, altimeter, radar, and the multi-time frame radar screen with this. Well, let's take off radar. I like to look at radar on and off so it doesn't clog my charts, but looking at it to refine really where I'm going to invest. That's the important thing. So, you know, it looks really great. Overall, there is an incredible bias towards the upside for Disney. So generally speaking, generally speaking, we are seeing, you know, this upward bias. So coming in a little bit here, I want to just kick back for 1 second to Intel. See what? Yep. See, look, Intel's fading. We talked about this, right? This fade that's coming on here. You know, it's up clearly on the day at about 53.29. We marked this area right here as the important level for it to get through. It is trading right up into that top end of that box we drew right here. So currently trading up about $1. So continue to watch this. And if you have any questions, you know where to find me. Thank you for coming. Thank you for being here. And we'll see you again next week.